All right, today I'm going to show you a property that you can make 112,000 on that this deal didn't exist just 2.5 years ago. And what's crazy about this is that 99% of people will look at this house and not have any clue that there's a six-figure payday built right into it. And so today I'm going to show you exactly how we're analyzing it, where the profit comes from, what could kill the deal, and why this is the type of property we're looking at every single week. And before I show you the deal, though, I want to spend a few minutes talking about why these deals exist, not just in Boise, but in many other metropolitan areas around the country. And it really all comes down to zoning. Um, Today, we're going to spend the first 10 minutes talking about primarily the zoning code rewrite in Boise, but also what's happening across the country. Then we're going to look at why the zoning code change in 2023 allows this deal to happen for this week's Infill Deal of the Week. But first, if we haven't met, my name is Zach Matson. I'm a developer and builder here in Boise, Idaho. I've been investing in real estate since 2013. And even before then, for years, I started educating myself on real estate by reading dozens of books and attending hundreds of hours of educational seminars and in-person trainings. And then I basically got into investing in real estate by house hacking. I bought my first duplex in 2013 by living in one side, renting out the other, and I fixed up the side I was living in. And then I went on to buy a second one a little less than 2 years after that. And then in 2016, I transitioned into flipping full time. So I lost my job at the time, and then I got into flipping full time. And then through that process, kind of found myself seeing a lot of opportunity in infill development. And ultimately, I transitioned to infill development in 2019 and into 2020, basically doing full-time development starting in 2020. And today, my team specializes in taking properties that most people see as a single house on an ordinary lot, and looking for ways to create more value through lot splits, subdivisions, ADUs, and new construction. Now, we also deal with raw land, but we specifically focus on infill development. So that's also raw land within city limits. That's considered infill development. In the Boise metro area, there's still areas or pockets of raw land that are still within city limits with infrastructure around it. And I've analyzed thousands of properties and have personally gone through the entire process from buying the property to entitlements, to horizontal development, to building and selling the homes, and even owning rentals. So every Friday, I'm going to take what we're seeing in the market and break down one of the most interesting opportunities we found that week. So whether you're an experienced investor, a realtor, or you're really just trying to figure out how this whole infill development thing works, you're in the right place. And now for our Infill 101 segment, this week's Infill education is talking about the zoning code. Now, zoning is one of the most complicated aspects of property development. So one of the biggest problems is that it's never the same across cities, towns, or counties. So even within the same metro area, each individual city or town has its own unique zoning code. So this makes it extraordinarily difficult for most people to get a grasp on zoning. And it's one of the reasons why deals like today's deal are possible and 99.9% of buyers overlook it. Zoning is actually one of the things that I personally nerd out on. On my very first development deal, I read through the entire zoning code, all 600 pages of it, front to back, 3 times. And then I reread it when the city adopted the new zoning code in December of 2023. And then since then, I've also researched, aspects of the code hundreds of different times. So as a result, my superpower is now that now I'm able to basically instantly recognize development opportunities, and essentially I can look at a property and within 30 seconds know exactly what I can do with it. So the major problem is that with zoning for Boise, for example, the zoning code in Boise doesn't apply to any other city. So by knowing the Boise zoning code, and working on dozens of other properties or projects in other cities, I've realized that, or basically how to find pertinent information quicker. And so even though I haven't memorized, like I have the Boise zoning code, even though I haven't memorized most of the aspects of the code, I know how to find it a lot easier. And that's something you get with experience. So if you're a developer or somebody that's trying to get into development, the more you research code, even if you're not going to, read it front to back, the more you research it, the more you see similarities from city to city. And so you can actually kind of get into a flow where you can find information a lot quicker and know what to look for and where to look for it. And so, me personally, I've now kind of memorized the basic zoning details of the cities that we track development projects in. And then really with AI and, internet searches, really almost anyone can at least get the basics on almost any property. So for example, if you wanted to know what R1C zoning allows in Boise, you can literally just Google R1C zoning Boise, and it's going to pull up the very first the very first information it pulls up. In fact, let me do this on my share screen here. Okay, let me find. There we go. Okay, so if I just type in R1C zoning Boise, the very first result you get. Now you can look at this also, but not all the time. This isn't all the time very accurate. Like even looking at this right now, I'm actually seeing a couple inaccuracies. So like max lot coverage 40%, that's not really a thing, except for in certain areas or in certain overlay districts. And then parking, this isn't accurate. So the best way to do it is then go a little bit further, and then you have this residential traditional handout. They have a user guide. There's also links to, there's kind of the basic information for each one, or for each, or for this type of zoning. But then there's also links to the actual zoning code. So if I click on this, for example, it gives you use regulations. So it tells you what you can do in that zone. So when you come to R1C here, you can kind of follow it along to see what's available in that code. So that's just an example how you can find information pretty quickly just by Googling it. There's still a lot more information that you need before you can develop a property, but this gives you like just the general information and it's pretty easy to find. But I wanted to talk about, I'm going to stop my share here. What I wanted to talk about is the change that happened in December of 2023 with the new zoning code. So um, the city of Boise rewrote their entire zoning code in December of 2023, or they implemented it in 2023. And so what that did, just as a, kind of a base level. So in most districts, they allowed for a higher density and smaller lot sizes. So for example, in R1C that I was just talking about, that's the most common zoning district in Boise. The previous minimum lot size was 5,000 square feet. And so with the new zoning code, it's actually been reduced to 3,500 square feet. So as a result, we can actually do today's deal because of this new zoning code, versus 2.5 years ago, we couldn't have done it because today's deal, the new lot size is actually 3,570 square feet. So it's just above the minimum lot size requirement. Whereas, 2 years ago, that wouldn't have even been possible at all. And then, so what else? So we also have less parking requirements. So in almost every zoning district and every type of housing, they actually reduce the parking requirements. So it used to be for single family homes, for example, you had to have at least 2 parking spots. A lot of subdivisions, you had to actually also account for guest parking. And then on ADUs, you also had to have another, if you built an ADU on your property, you also had to build another or have another off-street parking spot. And for people that normally would have the backyard space to build an ADU, a lot of times what kept them from being able to build an ADU was that they couldn't add another parking spot because they didn't have room for it on their property. So it severely limited people from being able to add ADUs to their property. So now there's no parking requirements when you add an ADU to a property. So now if you have the backyard space, or maybe you have space in your basement that's unfinished that you want to add an ADU, you can do that and you don't have to worry about having to add the parking. The other thing with ADUs that changed is previous to the zoning code change, they had a deed restriction on your property if you wanted to build an ADU. So if you wanted to build an ADU, they put a deed restriction on your property where you had to live in one of the units, no matter what. So you, like a developer like me, couldn't go out and build a new house with an ADU to sell it. Because we weren't the end owners, so we couldn't build it to sell. Actually, they wouldn't even approve it because we were the original owners. So there's no way to do that in the previous zoning code. There's also no way for investors to basically house hack. Like if you want to buy a house and live in one unit and rent out the other, and then eventually, buy another one, you couldn't ever move out of that. Okay, so I'm having some internet problems, so I'm cutting in and out, but we're jumping back in here. Um, so yeah, with parking on ADUs, so this really the limits on the deed restriction on the ADUs prevented investors from being able to buy a property and house hack either by building or owning a property that had an ADU on it already, and then eventually moving out and then renting both units, or if they wanted to build an ADU as a rental and then eventually move out. With that deed restriction previously, it basically prevented investors from being able to buy and hold these properties long term when they eventually moved on to another property. And so now they've removed that requirement. So the city of Boise no longer has the deed restriction. And now what we're seeing a lot of times is we've actually seen a lot of houses by infill builders being built with ADUs. And so it's allowing for people to buy homes even in today's interest rate environment, and kind of reduce their cost of ownership by renting out the ADU that's attached to it and getting some of that rental income to offset some of their mortgage cost. Or even, if you have, a mother-in-law or something that wants to live with you, that gives you the option now to do that. And there's not as many restrictions. So one of the other things that changed with the new zoning code is taller buildings. In almost every single zoning district in Boise, it allows for taller buildings now. So for example, in R1C again, it used to be that you had a 2-story height limit, and I think it was a 30-foot height limit on the house, and now you can actually do 3 stories. And then R2, you can actually go up to 4 stories, whereas previously I think you could only do 3. It might have only been 2 even. But anyway, you can do taller buildings now. So that's especially important, on these smaller lots now. You can build, instead of building out, you can build up. And so if you wanted a larger home or to get those bigger square footages, even on the smaller lots, you can get those now by building 3-story homes instead of just being limited to 2. You also have more uses. So in R1C zoning, they now allow for triplexes and fourplexes in certain conditions. Ultimately, as long as you can fit the parking on there, you can build a triplex or a fourplex on a single family or on a R1C lot, whereas previously that wasn't allowed at all. And then one of my favorite changes, and you guys have seen this from me a lot lately, this year especially, is really the cottage villages. That's huge. That's a game changer in the development space, and being able to bring affordable housing or more affordable / attainable housing to the market. So one of the challenges as builders and developers in being able to make housing affordable, obviously you have cost to build that are pretty set. You can't you can't build for any less past a certain point. And so what limits housing prices a lot of times is because you have that set build cost. If you can only fit 4 units on an acre, and then you still have the development costs and you still have the building costs, Well, in order to build houses that make sense that are profitable, we previously had to build either really large houses that were then all of a sudden unaffordable. It wouldn't make sense to build a smaller house on a large lot because you can't, because of what the cost of the land and to develop and to build. You had to build a larger house to offset some of those costs until you get enough margin to be able to build something. And now with the higher density and the smaller lots, it actually reduces your cost per lot. I talked about this a little bit last week with the economies of scale. So a lot of that is economies of scale, but also just being able to fit more units on the same lot. You don't have, you're bringing in utilities for more units, and it's less cost per unit because of economies of scale. But then also on your build, now because you have more lots, you can actually build smaller units because your cost per unit is lower on the land. And now it actually makes sense to build smaller units that are more in that attainable price range. And then things with another thing that kind of limits your ability to build affordable homes, and I think cities across the country have finally started to realize this, is that red tape, bureaucracy, getting things approved, that adds cost because it adds time. And so the more red tape we can remove for developing, getting projects approved, tape we can remove for getting projects approved, and the quicker we can get them approved, the lower or the more it lowers our cost to hold that property, and in some cases not even close on it until it is approved. And that saves on costs, and that allows us to build properties that is a win for everybody. It's still profitable for us to build them and develop them, because if we can't profit, we don't stay in business. It helps the city by getting more properties approved, or more housing on the market, and it helps the end buyers because we can bring more affordable projects to the market. And then another update I wanted to mention, this just happened actually 2 months ago in Boise, is they actually had a city council meeting that they approved a change to the zoning code where they actually allow for up to 2 ADUs on every property now. So as long as you have the space for it, you can either, and ADUs can look like, they can be either detached that you build in your backyard. They can also be garage or apartment conversions, or basement conversions. They can be additions. So it looks like few different ways you can do that. But as long as you can fit it on your property, you can actually put up to 2 ADUs on your property if it's a single family home. So that's a nice change where you can actually now, instead of adding just one income producing property, you can add a second. And so that's also a great deal for investors to in order like that already even own properties that they can add units to their property and make some income from that. So how about some other cities? So there's other cities, and I haven't done a ton of research, just kind of what I know in my conversations with other investors and going to different meetings and everything. Maybe I'll do an education series on specifics in specific markets. And if you're watching this and you're in another market and you're curious about your market, feel free to send me a message, and maybe I'll do a deep dive in a specific market if you're watching this online. And then, but a few of the markets that I've kind of, been looking at just from either people I follow or training sessions I've been in the past year or so. One of them is Seattle. So I know with Seattle, they actually allow you to build an ADU, subdivide it from the original property, and then you can sell that ADU separately as its own unit. And this is actually kind of a great deal because there's investors and builders in Seattle right now that are making, hundreds of thousands of dollars on a single build because they're just building an ADU and then going through the subdivision process, and they're subdividing that ADU off of their original property. Kind of similar to what today's deal is. It's just a subdivision. It's a regular size home. And it's kind of similar to what we're able to do with cottage developments where we're building smaller homes, but we're selling them essentially on a condo plat. And so you're buying the home, but you don't necessarily own the land. It's a little bit different in Seattle because I think they own the land still, but there's a lot of opportunity in Seattle for backyard ADUs and splitting those and selling them individually. And then one thing that happened recently in San Diego, I think that was just this year that they passed this, but they actually allow for unlimited ADUs on a property, or unlimited units on a property, as long as you can fit them. So basically, as long as you can meet their, their other requirements, you can put unlimited units on a property. And then in Portland, they've also codified cottages in their zoning code. I don't know the exact details in Portland, but I know it kind of, the cottage idea kind of originated, I believe, in Portland and maybe the Seattle area as well. But let's look at today's deal and what the difference is here, with, or why we're allowed to do this deal today versus when we couldn't have done this 2 years ago. So we're going to do a little bit of a deep dive into today's deal. And if you're watching for this for the first time, so what I'm going to show you here in a second is our infill deal list. It's basically our spreadsheet that we track every single infill deal on our market that we the markets that we follow. And so we see potential deals that come to the market every single day, and about once a month we come across off-market deals, and then those also go on our list. So we then do a high-level analysis. So this is basically kind of back a napkin analysis, but it's actually pretty accurate because we're really accurate on our uh, uh, on knowing what our costs are to entitle, develop, and build. So a lot of times this high level analysis, once we go through the full underwriting, they end up really similar. In fact, there's deals where they've gotten better as we underwrite it further. And there's also deals where, something comes up during due diligence where something changed and added to the cost. But it's a high level analysis. It's not designed to be all said and done. This is what it is. We go through a deeper dive once we're under contract, and we start doing the due diligence further, because we have a 200-point checklist in our due diligence that we go through. And so on every one of those levels, it has the possibility of either adding cost or reducing cost. And so we just verify through that due diligence process, once you have the property under contract, that we verify our numbers. So going into every deal, so when I do these underwriting deal, or this high level underwriting, I pretty much know what is going to be required on every single lot. But every once in a while, there's still surprises that come up. So, for example, a couple of months ago, we had a property under contract with a client that we found out that we couldn't, even though there was water in the street, it wasn't actually serviceable to that property. And so during that due diligence process, we found out that, well, our original intent, or our original thought was, okay, let's put a community well on the property and use it that way. Well, we found out that didn't work. So we were going to be required to essentially upgrade the lifting station for the public utility. And that was just an outrageous cost that didn't make sense on that property. It would have made sense if we could build hundreds of homes, but it was only a dozen homes. So ultimately that deal didn't work. So there's an occasional deal where, we come across something during due diligence that, that, basically adds to the cost, and that might make a deal, not workable. And that's why we have our due diligence process so thorough as well. But I'm going to share my screen here. We're going to get into the deal of the week. And if you're watching this replay and it's been a little spotty, I've lost internet a couple times and had to splice together my my videos. So trying to do it as smoothly as possible. Okay, so today's deal is on the Boise bench. Address is 2379 West Pelosi Street. So it's on a quarter of an acre already. And so the existing house is a 4-bedroom, 2-bath. It's a single level with below grade. So it's about 1,050 square feet on each level. R1C zoning, like we talked about previously. Okay, so we have a total profit on this property of 112,000 on 213,000 invested. Now, this is assuming that you put 25% down on the property under like a traditional some type of traditional mortgage, by traditional, I mean this could even be a DSCR mortgage. In fact, a DSCR, I think with 25% down on this property works. In some cases, you can actually do a DSCR with a negative ratio, and you can put less money down theoretically. You can also do more traditional lending as well. If you, for example, if you're looking for a house that you just want to live in, and do some sort of house hack, you could buy this house with a traditional like FHA or conventional loan for 3.5 to 5% down. And that would actually reduce your out-of-pocket expenses by about $100,000 on your down payment. Now your payment would be higher, but if you're going to buy a house anyway, this is kind of in the range of what most, a lot of people are buying houses anyway. So if you're looking for a house anyway, it's a great way to house hack, and you still make this 112,000. And then this is over 3 years, but really it's probably more of a 2.5 year deal, just because there's less infrastructure required with this deal than what is on a normal subdivision. And then we have, once the property is subdivided, and I'll get into, I'll cover an education session at some later date on the whole process, but essentially it takes you a little bit of time and money. But once you have the lot separated, you can now sell that original house. So if you bought it as an investment, you can just sell that house. You get 93,000 back, and now you only have 120,000 into the deal, and you get this back in time to build the new house. And so you can basically get a lot of your capital back from that selling that original house again. And then I also do like calculations here on, if you kept the new house as a rental or even to live in it. We do have some clients that are that look for properties where they can kind of do a house hack on a new build that they live in. Then it takes a little bit of time to get there, but ultimately you could refinance it for 445,000 on a house that's worth 730. But anyway, so we have our entitlement cost, 51,000, the horizontal infrastructure. So there are some sidewalks that we would have to add. We'd have to bring sewer into the new lot, probably upgrade the power to the new lot. So we anticipate these costs being about 33,000. And then if you were to sell the lot at that point, you could actually make about 55,000. Now, ideally, our clients that we work with actually go all the way through the build, and it actually works out better for you that way anyway. So this is your all in for the entitlements, horizontal, and new construction, or the vertical, is 482,000. And then in anticipated about 48,000 in interest. And this is typically a little high on the high end too. We like to underestimate this or overestimate this, sorry, so that you come in under this. So we're usually pretty conservative here. And then we have a resale value of 730. We actually have a new construction home that's really close by, that's currently pending at this 730 price. That's about this size. And we actually added a bedroom to this. What we feel would be the best thing to put on this lot is a 4-bedroom, 3.5 bath home with then a 1-bedroom, 1-bath ADU, either as a basement unit or above the garage. We could do that either way. So you have your sale costs and everything. In fact, this might even, with that extra bedroom, this might even be a little bit higher. But then on this new house, you would actually profit almost 150,000. Where where it gets down to 112 is because if you sell the original house, and in that 1.5 years it takes to get it split, we're not assuming any kind of increase in value in this house. You basically have about break even on the rents, but you have a loss here because of the sales cost. So that's why that's offset. Now, more than likely, I would say in 2 years, the way the market is going, more than likely, and then unless we have another major change, more than likely this house is actually worth at least a little bit more than what it is currently. I'm having all sorts of internet interruptions today with my recording, so this is going to be probably a little bit spotty on YouTube when I put it up. Hopefully not too bad. Hopefully I can make it flow as good as possible. But anyway, we have so this is what the debt you would refinance if you were wanted to refinance the house and keep it. You would now at this point you would actually still have your 120,000 capital in there. But on a $730,000 house, let's see what the debt to income would be on that, or debt to loan to value rather. So 446 over 730, so it's about 61% loan to value. And if you did the 446 plus 120 capital that you still have, you'd be at 566 into 730. That's about a 78% loan to value. So you could actually, if you wanted to buy this property, refinance it, the new house, you have a new construction house that you're living in, and still have equity in it. Essentially, it's kind of a good house hack on a new construction where you would have about 100, I think it's 170,000 roughly in equity, that you could basically refinance, and then you're essentially giving yourself a discount on buying new construction. It takes a couple years to get there, but it's definitely a possible way to do a little bit of a house hack on new construction. Or if you're an investor and you just want to make the money, you can always do that as well. Okay, so moving on to a couple other deals that we have currently that we've been kind of following. So we have our subdivisions. We've had a few of these deals as deals of the week, so that are still active on the market. So if you're looking for, a bigger payout or a little bit bigger project where you get some of these economies of scale going, we have many of these that they're typically, take a little bit more investment. So these are typically between $300,000 and $800,000 investment. But we have a deal here, this Garden Street deal. This is a deal where it's an existing church building, but you can actually convert that and use some of the incentives that the city has, and convert it to like studio apartment living. I think I had off the top of my head, I think it was like 20 units that we could add, 19 units. And then you can also build more cottages as well. And so that's where a lot of your profit comes from, is cottages. And you can actually theoretically, you can build and sell the cottages, and then keep that new apartment with zero cash into it and be cash flowing. So that's a really good, another really good profitable project, we feel. And then we have this cottage village on Maple Grove Road, that looks like and this one actually just came back on the market. I think this is the one that, yeah, it was on the market, went pending right before we could get it under contract with another client. And then it actually came back on the market last week. So this is another really good deal. We underwrote it a few different ways here, with cottage development, and then with different loan options. So there's different capital requirements based on that. But all of them, you're basically looking at about a $600,000 profit. And then we have another cottage village on the north end here. Again, close to $600,000 profit. We have this is another cottage village. This would require a rezone, but the rezone on this, I think this is the one. Yeah. The rezone on this would actually be pretty easy, since since the city actually wants to rezone it. It's right next door to, it would actually have to be annexed into the city and then rezoned, and it's right next door to what we want to do. So that shouldn't be a problem, and we can essentially wait to close on it until we get through that process, or at least get far enough along in that process that we know it's going to work. And then this is another cottage development. Again, a little over 600,000, and this is a great location too. But yeah, another cottage development, and there's an existing house on the property that backs up to a golf course. So that's another great opportunity. And that the existing house, I think, is a good flip opportunity as well. So you can fix and flip and build cottages. In fact, just down the street, there's another cottage development being built. I think they're breaking ground, putting in the utilities here, I think this week or last week. And so those cottages will actually be really good comparables for this. And then, so those are the deals that we've shown in the past here. I think we also we had a couple deals that went pending this week. So there was this one, this was another cottage development, and then this one here was another cottage development. It's actually approved for, I believe, 6 or 7 homes. But this is how I analyzed it, doing how they have it approved. It actually doesn't work very well at all. But if we redo it as cottages, it has a ton of opportunity. You could actually profit about $1 million, but it's pending now. So somebody else snap that up. And then we have a development in Garden City, about another $500,000 project. So I think when I did the math on this last week, this was before this week's deal, we had about $6.5 million in potential profit on the deals that we've previously presented as infill deals of the week. Now this week we had $1.5 million of that go pending, so we're probably down to about 5 million. But if you're watching this recording, we have multiple active deals that you can buy. So really, really great returns. If you look at some of these, you have, close to 100% return on investment, and they're anywhere from 2 to 3 years typically. So, you don't find that type of returns in most investments. Um, it used to be that, if you could double your money in 7 years, that was a fantastic investment. That's still a good investment. But some of these development deals, infill development deals, you're able to do that in a lot of times 2 or 3 years, just really because of the process that we use and how we identify and underwrite these opportunities. Then we also have we have a condo development that's got some potential. And then one thing that we just started doing this week, really at the request of a potential client, we're going to start tracking build ready lots. Now, we're going to underwrite these a little bit differently. We're going to underwrite these for cash buyers. So we're going to underwrite these as if you bought the lot in cash and paid for the build in cash. And so if you're looking for a little bit quicker turnaround where we can get these built in about 6 months. We still tell you to basically plan for a year, because it typically takes a month or two to get permitted, and then 6 months to build, and then a couple months to exit. So basically, a year start to finish. But we're going to start tracking these. So this will be probably on the up next week. And I'm actually curious to see what kind of returns those look like. They won't be really high margins, but they will be quicker investments for people that maybe have cash that just want it to keep kind of burning and turning. Okay, so despite all my um, issues with my internet here today, in fact, I probably forgot to reshare my screen a couple times, so I probably didn't get into some of the share or show you some of the stuff that I was looking at. But I appreciate you watching our video here. Um, And really, if you got value from today's episode, what I want you to do is don't just subscribe and disappear. Go to the link in the description and get on our list. So you can register for our weekly Zoom calls through that link. And when you register for that, that'll get you on our weekly list, where we're going to send you out our weekly deals of the week. So you'll get our one-page infill deal sheet. You'll also get information on how to get on our list full time, so you can have access to our infill deal list full time. So you'll see as we add properties, you'll have the first access to it. So, if there's a deal that comes on before our Friday deal of the week, you'll have first access to that, and you'll have the opportunity with your realtor to get those under contract before anybody else if you have access to that list. Then every Friday we're looking at new opportunities hitting the market. Really, we look at those deals every single day. So we add deals every day if they come on the market. We just see the most deals hitting the market on Thursdays and Fridays, but we do see deals, especially in the beginning of the week too. Sometimes stuff gets added over the weekend. But yeah, you'll also get access to our educational content. So you can learn how we're analyzing these deals and how we look at infill development. If you're on our email list, you'll also get our uh, guide to infill development. And really, if you're looking for your next six-figure real estate opportunity, this is the page, or this is the channel that you want to be on. So click on the link, get on the list, and we'll see you here next Friday when we break down the next infill deal of the week.